Welcome to ShortView Trading, it's your morning market hit for Friday 15th of January. What matters today for traders? Well, the price action has been fascinating in the past 24 hours. The S&P sold off into its cash close yesterday and has sold off again overnight in Asian trading hours. Having gone sideways for a week, it looks as though it may well be breaking lower and heading into a new downtrend. That price action is consistent and confirmed by what we've seen in Asian equity markets. The likes of the Nikkei, which was up 4.5% year to date as of the close on Thursday and up over 20% since the October lows. The Nikkei's closed lower overnight, as has the Kospi, another area of cyclical strength that's been pretty frothy. Certainly as of 8th of January this year, in the first week of trading, it was up 10% year to date and up a ton since the October lows. That's been soggy overnight, confirming and consistent with what we see in the S&P 500. But what's especially interesting about this price action and fascinating about it is it's happened at a time when two key factors are at play. One, our models are generating sell signals, and you can see in front of you the daily RAG risk appetite scoring system. This is a 1 to 2 week scoring system looking at fear and greed, measuring fear and greed across global financial markets. It's been on sale really for several days. Indeed, we update all these models every day in the daily RAG, as we also update our 1 to 2 week views and outlook on equity market index trading. And that is available to subscribers on the website. So this model is fascinating. It's been on sale, and the models and the markets seem to be rolling over inconsistent with that sell signal. That's the first piece of information that's interesting given the price action that we see. The second piece is really the fact that the market sold off despite two very positive pieces of news flow yesterday. Firstly, we had Jerome Powell discussing the outlook for monetary policy in a webinar, reiterating his dovishness, reiterating the monetary accommodation that's going to remain in place from the Fed, at least until unemployment's at very low levels and inflation is consistently at or above 2%. So pushing back on some of the tapering chat from some of the more peripheral Fed governors we've had over the course of the first 2 weeks of this year, and reiterating dovishness, much as we saw from Vice Chair Clarida in the previous trading session. So that's the first piece of positive information yesterday that the markets didn't necessarily respond well to, or ignored, or in other words, it was in the price. The second piece, of course, is the Biden administration economic stimulus plan, which was announced yesterday by the president-elect. Much bigger than expected. The market had been looking for a package of $750 billion to around $1 trillion. He announced a package of $1.9 trillion, almost 7, 8, 9, 10% of US GDP. A very big package coming straight on the heels of $900 billion that was done over Christmas. So that's very good news for the economy, but the market didn't necessarily digest it and take it that way. So it's interesting to see price action and markets selling off despite good news flow. That's indicative of the likely near-term trend and very interesting insight into where markets might well go from here. So that leaves us with the key question, what's next? Should we take that price action over the past 24 hours, particularly in response to good news flow, as an indication of where markets are going over the next week or two? Or do we think actually maybe this is just a 1 to 2 day wobble as the market marches up to a much bigger high, a higher local high, and a bigger crack, a bigger pullback and wave of risk aversion in markets, much along the lines of what Harry was discussing in yesterday's video, the build up to plus 20 on the sell-off indicator? Or is this the beginning of a new 1 to 2 week downtrend? For our full analysis of that and our view on equity markets and equity index futures and how you should trade this market, please see today's Daily Rag available to subscribers via the website. So what are we watching today? Well, there's plenty going on. There's another Fed governor speaking, Kashkari, but unlikely to be that important given we've had Powell and Clarida already this week. There's some macro data coming out. US retail sales will be a focus, as will Michigan sentiment. It's the first estimate of that for this latest month. And then most importantly, I think we've got the beginning of the fourth quarter earnings season in the States, with the banks in particular today, JP Morgan and Citi amongst others. They will be watched closely, and they may well set the tone for much of this earnings season over coming weeks. So that's it from us. That's your morning market hit for Friday 15th of January. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.